Realty Nation, it's your host, Avi Golhar. Welcome to the Think Realty podcast. In this podcast, you're going to learn about my good friend Nancy's profitable landlord system. Exactly how to find, fund, and manage single-family rentals. You know, it's the easiest long-term way to build wealth in this country. And if that's what you're looking at doing, which you should be doing, if you're not, then I think you're completely out of your mind. But if you are, then awesome, and we're going to learn some tools today on how you can do it easier and better and faster, because at the end of the day, speed, velocity to these deals is what matters, ladies and gentlemen, and you're going to learn exactly what that formula is today. So I'm excited to have Nancy on the show, and then after that, I have a cool little article I'm going to talk to you about. Total time is going to be about 15, 16, 17 minutes, so strap in. It's going to be a lot of fun. The sponsor for today's show is Clint Coons of Anderson Business Advisors, nationally recognized for providing bulletproof asset protection, tax, and business strategy advice to real estate investors. Go to getbulletprooftoday.com and receive his book, Asset Protection for Real Estate Investors, for free while supplies last. All right, let's get to it. Nancy, welcome to the show. So excited to have you today.
Thank you, and for having me, and good to see you again. You're
Likewise.
looking well.
Yeah, well, thanks. I think it's more the hair gel than anything. That's all I'm trying. I'm just trying to be like you with the hair.
You always look so good with your hair.
Oh,
whether I see you in person or on the
podcast,
you're just a
You're making me blush.
What can you say?
Stop it. Stop it. So give us a little background. Who are you? What do you do for those of us that don't know who you are?
All right. Well, I've been in real estate investing for many years. I'm a real estate broker here in the Dallas-Fort Worth area. I do fix and flips. I do wholesaling, owner financing, creating notes. But my expertise is single-family rentals, and I've built my wealth and legacy on single-family rentals. It's the bread and butter of my business, and I'm been working on under COVID. I put together a step-by-step process of how anyone can acquire single-family properties, how to find them, how to fund them, and how to manage them.
That's awesome. And from a beginner's perspective, and I want to talk about, I don't have like the two conversations with you, the beginner and then the pro single-family rental. From a beginner's perspective, why should I care about SFR?
Care about what?
Single-family rentals.
Oh, single-family. All right, because over time, they are by far the safest investment vehicle, I believe. That's my opinion. Other people may disagree, but they've done really well for us. Number one, people are always going to need a place to live. That's just hands down. Families want to raise their, children or, grow up in an area that they can get good schooling, and they want to have comfort knowing that they can rent if they can't buy. That's kind of the dream of people to own their own home. And when that's not possible, they're going to rent. So I personally like 3-bedroom, 2-bath homes. I think they make the perfect rental because never have a problem renting them. It's about the perfect size for a family that's just starting out. And for a new beginner, it's easy to get into single family rentals because one, you can usually get, if you haven't built your network of lenders, you can usually get a conventional note. If you're buying your very first rental, you can do house hack where you can live in the house for a couple of years and then rent it out. So there's so many strategies that you can use to acquire your first rental property. And once you start with that first rental property, then you can leverage the equity in that. And then you just keep repeating the process until you've grown your rental portfolio.
So for a lot of beginners, they might say, well, I've got, say, 30% equity in my property, and now I want to take all the 30% out and then move it and use it to fund another property. How much leverage do you recommend on that? Like, do you recommend sucking out all the 30%, or do you recommend maybe 15, 20?
I'm more like I stay within the 20, 25% range because number one, I don't want to be upside down. So when you invest in real estate, you do want to kind of be cautious about not over leveraging, if you will. So typically, depending on how you buy the property, we just acquired a property where we will have, when we're done, about $100,000 in equity. It was a really good deal. So you still have to find a good deal, right, with some equity. But that's how we have really grown our wealth, is when we buy the property, we have instant equity. So we've already created or increased our wealth. And then after 1 or 2 years, we're able to refinance and do like the cash out kind of thing, where you have down payment for the next house. And you just keep on doing that. So when we really jumped to the next level, we had just 5 rental properties that we had bought in a couple years. And we bundled them together, got one note, took out all the equity, and we bought 5 more. So
That's awesome.
yeah. And so, within less than a year, we were millionaires, on paper, obviously,
Right.
uh,
In
cash
less
flow,
than a year with 5 or 6 properties, you
yeah,
are,
I mean,
that's what it
it,
takes. That's all it takes.
yeah, I mean, to build your net worth through single family
Yeah.
is really easy. It's just once you get going and you start stacking one on top of the other.
Yeah.
So what we did is through the profitable landlord system. So number one, you have to have deal flow. You won't get any wealth or anything unless you have deal flow. So we talk about, getting focused. Where should you be looking for properties? What we talk about seller scripts, because I am looking for distressed properties, but I don't have to use the formula 70% of ARV because I'm not flipping it. So single family rentals, you can pay a little bit more for a property. I mean, you're not going to pay 110% or whatnot, because over time, that property is going to appreciate if you bought it in the right neighborhood, right area. So we go through what I call my 10 profitable risk indicators. And our goal is that you could be looking at 2 or 3 different rental properties, and you could apply these 10 risk factors, if you will. And there's a formula. And at the end of the day, you'll get a number that will say you should buy this property. It's green, it's a low risk investment property. Or it could be yellow, which is caution, meaning over time, the risk will diminish because it's in an appreciating area. Or red, don't buy it, not a good deal, not ever going to appreciate, and you're going to lose money on that. So we really help people with a numeric system come up with how they should buy these rental properties and if they're a good deal or not. So they don't have to sit there, and because one of the biggest things with new people is they're afraid that they're going to make a huge financial mistake, which they should be worried about that, right?
That's
but when
so
we
true.
created the profitable landlord system, what I did is I sat down with over 100 landlords, and I said, why are you a landlord? And
Right.
the number one answer was to have financial freedom, quit the day job, and retire early. Hands down, that was the number one answer.
And from what I'm hearing too is when you have these numbers and you create a visual understanding of what these numbers mean, whether it's red, yellow, green, it really then helps to say, okay, here are the factors that are good about this deal. Here are the factors that are bad about this deal. And at the end of the day, you have to be okay with taking some level of risk, but it should be like informed, calculated risk, not just buying something willy-nilly.
You can minimize your risk. So yes, and so we did a step-by-step. So it's a very simple process. It's very repeatable and it's predictable. So once you learn the process of how to buy single family rentals, you just keep doing it over and over again. So, and then a lot of people say, well, I don't have any money, or maybe I should start in wholesaling. Now, this is not to diss on any wholesalers out there, but if you're a brand new real estate investor, wholesaling is the last thing that you need to be getting into. Think about the skill level that you would have to have, because number one, you're going to have to negotiate that price of that house with that seller so low, then you're going to have to turn around and sell it, at some kind of higher amount with a buyer. You have to deal with sellers, buyers, a title company that, knows how to do a double close. There's so many moving parts for a new person that it seems a lot of work that they don't have to do, when if they found a good deal, why wouldn't they work on finding the funding and keep it for themselves?
Yeah, that's 1,000% right. And I've been checking out your website, profitablelandlordsystem.com, and I cannot agree with you more with the 3 things that landlords just lack: clarity, measurements, and profitability. And quite frankly, that's the same with flippers, that's the same with wholesalers, that's the same with almost every business person that I know. It's, you think you're doing one thing, but you're really doing something else, and that's the lack of clarity, lack of focus. The
Yes.
second is, how do you even measure if these results are what you want? Your metrics are totally wrong. And then
Right.
third, if you lack the focus and clarity, and if you lack the measurements, like what metrics are you looking at, you're going to not be profitable. You will have zero profitability at the end of every month. And
Exactly.
as a single family landlord, what's the goal? The goal is cash flow. And you can't just be spending money, investing in really high dollar amount, say, marble countertops. Like, that's not a thing, right? Like, there's no way that makes sense for a rental.
You have to know when not to over improve it. It's a rental.
Yes.
The other thing is, you can find the best property in the best location with the best price, but if you make the mistake of the wrong tenant, you could lose any profitability for months, possibly years, if you get the wrong tenant. So we spend, after we kind of teach you how to buy the right property, then we put risk indicators for tenants. So it's like, well, you have to kind of know, I mean, I know new landlords, and they get excited, and then they get scared because they've got a vacancy, and they put the first person that breathes into their rental property. And before you know it, they have an issue. They don't know how to evict them. The person's not paying rent. They bounced a check, So there's so much more that goes into your cash flow. So it does have to do with finding the property. So what we did is, I'm going to show this. I don't know if your viewers can see this. This is the workbook that I put together. And so this is about 150 pages. It has real life examples, my case studies. We have exercises. So we're going to handhold you so you know exactly, first of all, we're going to teach you what to look for a property, what areas you should be looking for. I'm just going to give a tip to your viewers. If you're looking for a rental property, what you need to do is make sure you're not looking in an area. Don't buy that single family home where every house on the block is a rental. Just don't do it. You want to kind of stand out a little bit and offer, because why? You can actually charge more rent if you're in an area that doesn't have quite as many rentals, because people want to live in nice neighborhoods. But if it's saturated with rentals, that can actually run a neighborhood down. So as an investor, I stay away from areas that are complete. I know neighborhoods in my area, in my backyard here, that almost every other house in the subdivision is a rental. And it shows, because sometimes, tenants don't take care of the property as they should, and that kind of thing. There's bad landlords that don't enforce their tenants taking care of their properties. And, so there's a lot that goes into, not just buying the property and then getting the good tenant, and then the funding part of it. So the other thing that we help our new investors is, it's not that we're going to do risk factors for lenders. We're going to work with you so you're not the risk factor for the lender. So we actually turn the risk indicators, if you will, onto our investors so that we can position them so that they are less of a risk to a potential lender.
That's really
smart. We go into all kinds of different things: hard money, private, conventional, that kind of thing.
And that's also really important if you're a pro landlord right now anyway. Right? Take this time. So here's the thing. Here's why this works even if you're a pro. Even if you own 50, 60, 70 rentals already, this system, what Nancy has put together, what Nancy and her team have put together, always keep refining the system. Always keep refining what you're doing. Otherwise, you're going to lose out to your competition unless you're just, cool with your 35, 40 rentals, 20, 35, whatever, then great. And if you're not looking at acquiring anymore and you're onto something else, amazing, awesome, then don't even worry about it. But if at any point in time you're looking at growing, there are trends right now that you are probably missing out on, that everybody else is playing at, that you also need to be looking at. Example, secondary and tertiary markets. I've been having this conversation for the last 3 years, even when we had the nationally syndicated Think Realty radio show. And even then, I think, Nancy, you came on, we were talking about SFR, we were talking about single family rentals, we're talking about the secondary and tertiary markets. And here's the other thing that, Nancy, I have a question for you. Does it make more sense to buy in, say, an A market or an A area versus a B or C area? Should I, as a real estate investor, pay the premium to buy in an A area versus a B or C?
So I think if you're a smart investor, you actually look at all three areas. So I actually own properties in A, but I bought them at a point in time where the appreciation. So we spend a lot of time about how to identify appreciating areas. Number two, I love secondary markets. Number one, it's not as competitive if you're a real estate investor. And we've actually picked up several deals. In fact, right before I got on the call, I got another lead for one of our favorite secondary markets. And what we spend time on is populations and trends in populations. Where are people moving to? What are they looking for? I'm not really big on towns that only have like 3,000 or 4,000 unless there's some major employer, because if that employer, we had an opportunity to look at a couple of properties in a town that had about 7,000, and it was a great location. It was a great rental, but they only had one major employer. And if that employer goes out of business, then I'm probably going to have a really hard time renting that property, or I'll have to drop the rents to attract the right kind of people, because people will move.
Yep.
So I don't know if I answered all your questions. So
No,
I always look at different areas, and I keep focused. Like I will target certain areas that I want to have rentals in.
Yes.
And then on the team, what we were talking about, we also came up with the risk indicators for how to grow your team, how to let go, so to speak, and really live the life that everybody dreams of.
Yeah, because it's about building a business and not,
beach.
because it's not about building a job for yourself. It's about building a business and a system that serves you instead of you having to serve it every single day. I do have a question though, real quick, and then we've got to jump. But if there is a government, if there's say an Air Force or a military base kind of in the city, like Macon, Georgia, or as an example, you know that base isn't going anywhere because it's the government, it's the military, Air Force, naval, whatever. Is it okay then if that is like a market that I'm targeting? Should I be scared of that market at all?
So that would be like kind of the exception to what I said about all the rentals or whatever, because those are people that, they have families generally, but they need a place to live. They don't want to live in a hotel or whatever, and they need a place. So yes, I have invested and have rentals in those areas.
Got it. Last question for you, and then I need the website and all the ways to get in touch with you and your team.
Okay.
What do you think about HOA neighborhoods? Are they deal breakers for purchasing rental property or no?
Okay, for me, number one, I look at the cost of the HOA. If it's like $1,000, I look at how it's going to affect my bottom line.
Yeah.
Number two, I own rental properties in HOAs. And so the key is to get friendly with the HOA staff, right? Say, hey, you know what? I'm a real estate investor. I have this rental, because if there's a problem, I want the HOA literally to call me. And then through our screening process and application and the lease addendum that we use, we set the expectation with the tenant. Hey, there's an HOA in this community. You'll need to mow your lawn, keep your trash cans out of the way and that kind of thing. So for me, I look more at the cost, and then after that, it's relationship building with the HOA staff. So I do not think it's a deal breaker.
That's fair. The next segment that I'm about to jump to do is talks about, there's a sponsored article on Think Realty called Owners Associations and Single Family Rentals, and I'm about to talk about that. And I just wanted to get your thoughts because, for me, I agree with you. If it's $100, $200 a month, it's not that much of a big deal to the bottom line. I can still kind of make up that cost, and I can justify it, and I'm friends with the HOA staff, then hey, cool, it works. But if it's going to be $1,000 a month, I'm not getting a lot of value, and the HOA, they're just super snooty, then out, right? It just doesn't make any sense.
Exactly.
So Nancy, I certainly appreciate the time. I've got to jump. I know you're super busy. You got to jump too. What's the best way?
All right. Well, hey, thanks so much for having me on.
Yeah, you got it.
Contact info.
Yeah, what's the best way we can get in touch? How do I get this system, become a student, take advantage of the education?
Profitableslandlordsystem.com.
Okay.
Email me at nancy@kbnhomes.com, or give me a ring at 469-430-9885. Or just type in Nancy Wallace-Laabs on the Google, and you will find some way to contact me. So.
Awesome. Nancy, I appreciate it. And that's www.profitablelandlordsystem.com. This is great. This is exactly the blueprint that single family rental investors need.
And that's exactly right. And one more thing, it will be out on Amazon probably by the end of the month, 1st of September.
Cool.
So people can pick up a copy of it. And I'm going to have some tips and tricks that they can download, some freebies.
Yeah.
To just, and then if they need to contact me, it'll be full of all ways to contact me. So,
Awesome.
But thank you so much for the time.
Of course.
Appreciate it. Stay safe.
Hey, you too. Thank you so much, Nancy. All right, thank you, Realty Nation. This next segment is brought to you by Norada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateInvestments.com. So I just finished an awesome conversation with my good friend Nancy, and we're talking about HOA and whether or not the HOA fee should be a deal breaker if you're buying a single family rental in a neighborhood that has a sizable homeowners association fee. And, this article that Jeff wrote talks about how, it can be and it can't be. And you just kind of have to do the due diligence and see where the numbers lie. Now, there's some HOAs that will charge less than $100, $150, $200 a year. There's some HOAs that will charge $250 a month. There are other HOAs that will charge $1,000 a month. So it kind of depends. And if you don't run the numbers and if you don't befriend the staff, then I think you'll ultimately feel that later down the road. If there's an issue, if there's an issue that you're having with a tenant and that tenant is just causing a bunch of havoc in that community, you want the HOA to give you a call like right then and there and say, hey, I'm struggling with this tenant or with this property. Can we work together to resolve? And if that's the case, then I think it might be worth it, but you also have to look at the financial component. Make sure, don't forget to include that HOA bottom line into your numbers and see what that does to your cap rate, what that does to your return. It can substantially decrease your return if you don't do it right. So read the article. It's called Owners Associations and Single Family Rentals. Go to thinkrealty.com. Check it out. It's worth the read. And just rewind this particular show and go to where Nancy does talk about HOAs just maybe a minute ago and really let that soak in, because that's really sage advice. It's really, really good advice for you new real estate investors that are jumping into SFR and you're looking at properties where there is a homeowners association fee. So definitely go check it out. If you have any additional questions, you know how to get in touch with us. Go to thinkrealty.com. It's been fun. I've learned a lot from Nancy. So again, Nancy, thank you so much. And we cannot do the show without our sponsor. So today's sponsor is Clint Coons of Anderson Business Advisors, nationally syndicated for providing bulletproof asset protection, tax, and business strategy advice to real estate investors. Go to getbulletprooftoday.com and receive the book Asset Protection for Real Estate Investors for free while supplies last. So Think Real Estate Nation, that's the show. Got questions, you know how to get in touch. I'll see you next time.